All right, today we're talking about a huge economic shift, one that's happening right now. It's like a new gold rush, but this time it's all powered by the cloud. Let's just jump right in.
$3.4 trillion. I mean, just let that sink in. That's what the hyperscale cloud market is expected to be worth by 2034. It's an absolutely mind-boggling number. But the size of the market isn't even the most interesting part of the story.
Now, the real story is what's happening just out of sight, in the shadows of these giants. See, while a few huge companies own the actual cloud, there's this entire bustling economy popping up around them, and that is where the action is. That's where the opportunities are. Okay, so let's unpack this new cloud economy. To really get what's going on, you have to appreciate just how big and how fast this whole thing is moving.
Just look at this timeline for a second. Think about it. Back in 2019, which wasn't that long ago, global cloud spending was about $90 billion. Now today, it's shot up to over $750 billion. And where is it headed? They're projecting $2.4 trillion by 2030. That's not just growth, that's a rocket ship. And the fuel for this rocket? It's all about AI and this worldwide scramble to go digital.
But here's the thing. This huge digital world, it's not some abstract concept floating up in the clouds. Nope. It's built on something very real, something physical. And that simple fact has kicked off what is, for all intents and purposes, a global land grab.
OpenAI's Sam Altman really nailed it. He said that this AI revolution we're all watching, well, it runs on a ton of actual physical stuff. Hardware, power, chips, and its appetite for that stuff is just bottomless.
So how bottomless are we talking? Well, get this. OpenAI has this project called Stargate. It's one single project with a possible price tag of $500 billion, all just to build the next wave of AI infrastructure. That's the kind of scale we're dealing with here. It's just wild.
And this is what that demand looks like in the real world. This frantic race to dominate AI has ignited an absolute firestorm for the buildings that actually are the cloud. We're talking about data centers. It's turned into this insane global fight for land and electricity.
And what happens when you have a firestorm like that? You get a massive squeeze on supply. The big hyperscalers, they're pre-leasing entire campuses, sometimes for 10 or 20 years, before a single shovel hits the ground. This is causing huge shortages of land and power. In a place like Northern Virginia, a major hub, you might have to wait 3 to 5 years just to get power allocated. So, what happens to prices? Of course, they go through the roof. Lease rates have jumped 20, even 35% in just 1 year.
So, who exactly are these giants causing all this commotion? Well, let's meet the Hyperscalers.
This pretty much tells the whole story. You've got 3 main players: Amazon's AWS, Microsoft Azure, and Google Cloud. Between them, they control something like 2/3 of the entire market. These are the undisputed kings of this new economy.
So, what even is a hyperscaler? I mean, what makes them different? It's not just about size, though they are massive. They offer what feels like endless computing power and storage. But here's the real key, the secret sauce. It's their library of services. They provide all the basic building blocks, the digital Legos, if you will, that everyone else uses to build their own software and tech.
But here's where it gets really interesting. These giants aren't operating alone, not at all. They've built this incredibly powerful ecosystem around themselves. Think of it like a giant flywheel that just keeps spinning faster and faster.
How do they get so big? They can't do it all themselves, so they rely on this massive army of partners. We're talking over 500,000 of them worldwide. These are all the software companies, the consultants, the people who actually bring the cloud technology to the final customer.
And the engine that makes this whole ecosystem go is something called co-selling. It's basically a tag team effort. The hyperscaler and one of its partners team up to sell to the same customer. It's brilliant, really. It helps speed things up, builds a lot of trust, it just makes everything work better.
And this is that flywheel idea in action. It's a perfect self-reinforcing loop. When one part of the system wins, everybody wins. The partners, the customers, the hyperscalers themselves, everyone's success feeds everyone else's, and the whole thing just builds more and more momentum.
So how does this flywheel actually spin? Okay, let's break it down. First, you have the customers. They've already promised to spend a bunch of money with, say, Microsoft or Amazon. Well, they can use that committed money to buy software from a partner in the marketplace. So, they're happy. Then you have the software companies. Suddenly, they have access to these giant enterprise customers they could never reach on their own. They're definitely happy.
And the hyperscalers? Well, all this activity just drives more and more use of their core cloud services. It is a perfect win-win-win. And it's why this marketplace is set to be worth over $45 billion by 2025.
All right, so when you have a system this powerful, this profitable, you know investors are going to notice. And they have. This flywheel has created this huge investment opportunity, not just in the big guys, but in that massive ecosystem that we've been talking about.
So that brings us to the big question, right? If just a few companies dominate the whole landscape, where does an investor even look for growth? Where's the next big thing?
Well, the answer is in something called the multiplier effect, and this is really the key takeaway. For every single dollar a customer spends on the basic cloud stuff, the partner ecosystem around it makes another $2 to $5. That's for things like consulting, setup, management, all the services wrapped around the core product. That is where the hidden gold is.
And believe me, investors have noticed. Just look at Europe. Since 2010, the amount of private capital pouring into these partner companies has jumped 23-fold. 23! The smart money is already making its move.
So, what does a winning partner look like to an investor? What are they searching for? It really boils down to a few things. First, they need to be experts in a hot area, like AI. Second, they need to have a really tight, almost symbiotic relationship with one of the big hyperscalers. Third, they've got to have a smart way of selling their product. And maybe most important of all, they have to be amazing at finding and holding on to top tech talent, which is incredibly scarce. You check all those boxes, you've got a winner.
So, let's end with this one big question. We know who's building the foundation of our digital world. It's a handful of massive companies. But who's going to capture the most value when all is said and done? Is it the architects who own the cloud itself? Or is it the tens of thousands of builders who are creating everything on top of it? The answer to that is going to shape the next decade of our economy.